transaction platforms where we can deal with different investments, either in domestic or international investments. So that is the lesson we are going to have today. And you all should get a good practical experience on these things. Last time also I went through the several aspects of Colombo Stock Exchange and the reports, the Colombo Stock Exchange. And I I can just today also I can discuss something about those reports and the way in which we can deal with the website, Colombo Stock Exchange website, and how we can get the data, how we can get the information, and different investment decisions could be taken after getting the information from those websites. In Sri Lankan context, the investment decisions can be taken by going through the Colombo Stock Exchange website with regard to the equities and debentures. If you want to get the details with regard to the fixed income securities, basically the bonds, government bonds, and that type of things, you should be in a position to get the access to the central bank website. So that is also a possibility, and I can just get you through those things, and you will be in a position to get a very good idea about how you can use that type of websites. And I think what you need to do is you need to follow the lectures. You need to deal with those things as I explain it, and you have to actively engage in the sessions. Through that, you would be in a position to get a very good practical exposure to those things, and you would be in a position to apply all that knowledge in your job situations and your decision making situations. Right. First, I just want to get you the idea about this Colombo Stock Exchange website, and I will just show you the way you can access to that. Now you can see the Colombo Stock Exchange website. And what I did was I just got some login there. So you also can do that. You can just put your email address there and you can have this My CSC account open. So after that, you will be in a position to just log into that, and then it will give you some limited information. So that way you can go into the CSC website. Now you can now look at the things and see how you can get the information from this website. So when you go to market, and you will see different publications in the market, under the market. Now it deals with the equity market, debt market, and OTC platform. The OTC platform means over-the-counter transaction platform. Equity is the shares, debt is the debentures and all. Now there you get debt market, retail trades, historical trades, Basel III compliant security list. And when you go into the equity side, you get trade summary, detailed trades, daily market summary, then industry group indices, most active volumes, company data, contributors to ASPI, and annual trading statistics. All these things will be available at equity. So when you go to the publications, so you get the CSC daily, CSC weekly, CSC monthly, and so on and so forth. So you get, if you take the CSC daily, so you can get it here, and weekly and monthly. I think in order to get these basic data into your stock transactions, it is the best publication is the CSC monthly, because it gets monthly statistics there. So you can get required information from that CSC monthly publication. So I will show you what it is, because the CSC monthly report. So you can have a download. When you download it, right, you get it. Yeah. Can you see the things on the screen?
Yes, sir.
Right. So now I have shown you the way you can get it. Right. So in order to do that, you need to have a login account for this CSC, and then we call it My CSC. So it's not a difficult task. What you need to do is you need to register yourself with CSC, and you will be in a position to log in.
So is it with a PO?
No, there's no fee. No fee involved there. So it's a free access. It's a free access, so you can do that. Now we just look at it, and I can just show you the different statistics available there, and what are the required type of statistics there. So you can just look at the first page. There you get, this is the December 2021 December monthly report. I think the January report also would be available now, because now we are in the month of February. So month of January report also may be there. So we can check that. We can check that. So anyway, I think as a critical month, we need to get the month of December monthly publication is more suitable now for our discussion. Now you just look at the price indices, the market indicators or price indices.
So is it possible? So is it possible to zoom the screen?
Are you looking at it through a phone?
No, laptop.
Right. Now is it okay now?
Yes. Okay. Yes. Okay.
Right. Now look at the price indices there. So I think this is the most important part of this publication. So then you can get some idea about the market return. Market return on account of or in respect to the two indices here. So one index is the ASPI, that is all share price index. The other one is the S&P SL20 index. So as per the ASPI, you can see the opening index and the closing index being given. According to that, the change is calculated, and that change is the return given by the market in respect to the all share price index. So that is what you call the market return. Market return with respect to the ASPI price index is 6.87 for the month of December 2021. And you have, if you take the S&P SL20, there you get a return of 9.22%. If you take the price indices. So then that is also can be considered as the market return for the month of December. Now I have given you two things. That what is one is the return, market return in terms of the ASPI. The other one is the market return in terms of S&P SL20. Though we say that there's another index taken here, so that is what you need to understand. The other index is ASTRI. So that is what you call all total return index. All share total return index is that. Now, if you take that also, though the indices are different, you get the same or very, very close or very similar type of a return there. That is 6.88. There's a small difference. And if you take the S&P SL20 TRI also, we call it the total return index, then there also you get 9.27 as the return. So therefore, you can see either you can get the returns calculated through these price indices or return indices. But I think the more valid result would be taken from the total return indices. Now, since we are looking at the market return, so I think this is a very critical information for us. If you put it as a summary, you know the market return in terms of ASTRI is 6.88% for the month of December 2021. The market return on account of with respect to S&P SL20 is 9.27. Right? So that is what we can gather from this publication. Now, if you take the other part of it, say, you can see the other statistics given here. In the month of December 2021, the total turnover with regard to the stocks is 149 billion, 91,810,887. So that is the, so in short, we can say about 149 billion turnover was recorded for the month of December 2012.
So here turnover in the sense it was sold, something like that. Shares were sold.
Turnover is all the transactions. Now, say,
Okay.
for example, there can be sales and purchases both.
Okay.
If all these purchases and sales being taken through the Colombo Stock Exchange, now all those things being taken as a total, and that total is called the turnover. So then this 149 billion is the turnover for the month of December 2021. Now, out of that, 145.6 billion consists of the domestic level turnover. So in that case, we can say the buying and selling took place during the month of December in Sri Lanka, in the country, is taken as 145.6 billion. The the rest of that, that is 3.4 billion. Now that turnover is on account of the foreign transactions, because the foreigners also deal with the stock market. So they also do buying and selling in the stock market. So that turnover is only 3.4 billion. So you can see, if you take different different months, you can see different types of turnovers for the domestic and foreign. Now, if you look at this statistics, now you have 1/1/2021. 1/1/2021, then that is a month. And yeah, that is 1/1/2021 to 31/12/2021. So that is for a year. For a year, it is, now you can see, it is 1,173 billion is the turnover on equity, and it took place under domestic trades, that is 1,112, and only 60 billion worth of turnover appeared under foreign. So that is how it happened. Now that is the whole year, all year 2021. So you can just compare it with the earlier year. Now, earlier year, yeah.
Foreign transaction means foreigners are investing in doing transaction in our stock market, is it?
Yes. They can do that. They can do that, and this is actually in the world market or whatever. I will show you that also, because it is given in the global market schedule. So I will show you that goes under the APAC, that is Asia Pacific region. You take it as Asia Pacific region. The Colombo Stock Exchange is quoted there also. So I will show you that also under Bloomberg. So then first we will go through this Colombo Stock Exchange in the internal one. So I will show you how it is been reflected in global markets also. Right. So first of all, we can get some idea about these things in Sri Lankan market. Now look at the things here. You can do a very good comparison also. Now, as per the statistics given here, 396 billion 0.8 was the turnover recorded in the year 2020. I think you can see the figures, right? Out of that, 318.3 took place in the domestic side. 78.5 billion took place in the foreign side. Now when you compare those things with the 2021, so that's a very good comparison, I think. What you can see there, now there's a drastic increase in the turnover of domestic transactions. It has been increased from 318 to 1,112. So that's a very high increase. Do you agree with me? So, but if you take the foreign side, it's a reduction, decline. Now, in 2020, it was 78.5 billion, whereas in 2021, it has come down to 60 billion. So that means now it's a reduction. Now, if you take the month of December 2021, it is only 3.4 billion for the foreign side. So if you put it as say, if you multiply it with 12, so you might get only 36 or something, no? So that could be the whole year's turnover. So we will see whether that whole year's turnover also can be taken, because I think that we can do that also. Now you can gather that information from these numbers. I think now very good comparison can be made here. The comparison between 2020 and 2021 can be made here. Then we get daily turnover, average equity. So this is the equities daily turnover in average. In the month of December, in average, it is 6.4 billion. Yeah. In month of November, it was 7.6 billion. Daily turnover average. Now you can see in the month of December 2020, it was only 3.2 billion. I think that's a big increase in the month of December 2021. So you can see the share market had a very good, high activities during the year 2021. So that is what we can say from looking at this particular sheet. Right. Now, in the year 2021 altogether, if you take it as the whole thing, the daily turnover is only 4.8 million. Daily turnover average. And you can see in the year 2020, the average was only 1.8. So that's a drastic increase in the daily turnover for the year 2021. Then you get the trades. When you say trades, how many trades took place? That is what it means. Now, under domestic, now altogether there were 1,103,653 transactions took place. And out of that, 1,092,119 was domestic transactions, and only 11,534 transactions took place the foreign sector. Then the number of shares traded is this. There you get 9 billion something for the month. Then you can look at now I want to just show you this also because it gives some peculiar type of statistics. Because of that, you need to look at it. Debt trading statistics. Corporate debt. Now you can see only 252,000 transactions took place. Turnover is only 26 billion. So only one trade took place. So now you can see when you compare it with the equity transactions, the corporate debt transactions taken place very rare. That is what you can gather from these numbers. And the other statistics are companies traded equity, that is 275 companies in trade in December 2021. Only one company traded the debt the same month. There were no closed-end funds. Listed companies. Now you can just look at the number of listed companies as it is. In 2020, the number of listed companies 283. in 2021, number of listed companies 296. In December 2021 also it is 296. Now you can see in December 2020 the number has come down to 283. But when it comes to November 2021, it came up to 290. And in the December month, it came up to 296 again. And you can just look at the market days also. Altogether, in the year, you had 240 market days. And in the month of December, you had 23 market days. And just look at this also. Now, this also gives you a very good indication about the different sectors.
So,
yeah,
there's no change here.
Yeah.
Is there a reason for that?
Yeah, the reason is now you can just look at these. These are all sectors, no? Sectoral, there's no sectoral change. That is why the reason comes as that, because there were no big transactions taken place by each sector. That is the issue.
So is there a way as to look at this debentures price
Yeah,
movement?
debentures actually now, since the debentures are very much few and far between, so then it is not very, indicative here, because you have only one transaction took place in the month of December. So the value is only 252,000 debentures traded, but there was only one transaction. I think in the end of this report, I think there can be something with regard to the debentures. We can see that maybe there.
Sir,
Yeah.
excuse me, what can you understand from these figures here?
No, in my opinion, I think this is now for the simplicity, they have not done any calculation. That is what I feel. Otherwise, now there has to be a change, I think, because otherwise now how can it be? Because the index is calculated on the basis of, say, they go through all the companies in that sector. Say, for example, bank, finance, and insurance. So there you get all the banks, all the finance companies, all the insurance companies into that. And when any transaction take place of that company, so that is really connected to the index. So that index is calculated by looking at those transactions. So when a transaction is taken place, we can't say that the index would not be changed. Because if your transaction not taken place only, you can say there's no change in the index. The index has to be changed. But here it shows that no change in the index. So what I feel is now they have not done it. This particular sectoral things being calculated on the basis of the beginning of the year figures. So that has been there for the whole period, I think. So that is why these things are taken like this. But I think when you look at this, you will see something different. But if you take the all share index and the S&P 20, the changes can be taken. Here they have given the movements. ASPI movement is there. Now it goes 1st of December. Now it is here somewhere here. So it is I think 10,700 and 11,700. It is close to 11,700. It is, I think, say in the mid, not in the middle. It may be 11,200 somewhere, but it ended with 11,700. So you can see the movements. But I think now can you say anything about these sectoral things by looking at this ASPI movement? That movement is not very indicative, no, not very significant, is it? What do you say? Now we look at, shall we look at the tables in the earlier pages? Right, you can see. Now this is the all index. All index being changed from 11,440 to 12,226. Right, so this is the change. When you take this change into consideration, now this is the whole thing. But if you take sectoral changes, no changes being reported, the meaning is they have not done the calculation. That is what I feel. Otherwise, it should not be, no? What do you say? There should be some movements in the sectoral indices also, no? No change being taken place here. Then if you take the other next page, there you get here all the dates being reported here. Now, yeah. Now you can just look at it. Now you asked something about debts and all. So there was a turnover of corporate debt only on 14 December. You can see 26.420 in millions, I think. Rupees thousand, yes. It is 26,420,000. I think that's a valid question. I think your question is a valid question, but in my opinion, I feel that they have not done the calculations. You can't say that there's no change as such. Then the foreign trading statistics are also given. Now, and then they have given the individuals and company basis transactions also. That is also another good information which you can have. Then the market capitalization, that's another good statistic also. In 31st of December, the market capitalization is given. Now the market capitalization, now this is a good indicator. Just look at it. Now how do you get the market capitalization? Now you can look at this company names, Expo Lanka. The last traded date was 31st December 2021. Now there they had 1,944,915,000. 1,954,915,000 shares. And the price is 375 and 25 cents. That is the price per share. So when you multiply the price per share with the number of shares, you will get the capitalization. Right? That is how they get it. Now you can see, now when the market capitalization is changed, there's no, you can't say that the index has not been changed. Now you can see, that is why I told you the calculation was not done there. That is why they have just kept it as it is. But you just look at it here. Now in the month of November, the market capitalization for energy sector was 22 billion something here. You see that. Whereas in the market capitalization in the 31st December, it is 47 billion. So it's changed. So you can't say it is not changed, right? Because index is calculated on the basis of the capitalization, market capitalization. So therefore, you can say, yes, you can't say that. Now, can you look at look at this and see anything has come down in market capitalization? Anything has come down in market capitalization when you take all these sectors? Anything has come down in market capitalization?
Yes, banks.
Banks, right. Energy, material, capital goods, commercial, transportation, automobile, consumer, household, healthcare, banks. Yes. Yes, it has come down. Actually, it was 355,900, but it has come down to 343. So that is one sector. Any others? Yeah. Oh, diversified financials. No, diversified finance. They are also declined. 1,382, 1,254. No, you can see that.
Yes.
Right. Yes. Yeah. That is the only, these are the two sectors where the capitalization has come down. So that's a, that's an indication of the growth of that sector. Sector has not been drawn, and it has the growth recorded a negative growth. So that's another thing we can get from this statistics. Right. Now we will go to the main website. And we can go to the trade summary also.
Sir,
Yeah.
you just said that diversified business, Now, if we take John Keel's holdings, can we take it as a diversified business entity under that sector?
Yes, but anyway, the thing is now here they have just mentioned about diversified. Now they took only financial type of organizations diversified. I think here I think last time here you can see. Wait. That we just went through, no. So I think there you just mentioned about diversified financial. There you had an increase, no.
I think the earlier page, it was there on the right side. Earlier page,
This
previous
one,
page.
previous.
Not here. I think page number 7, right hand side.
Yes. This side. No? All right. There you have yes, banks diversified financial. So there also you get a decline. You see, 1,382, 1,254.
Yes. Let's say if they had tourism companies under their portfolio,
Yeah.
they must have been going
Yeah,
down.
that may be the reason. That may be the reason. Yes.
So can, for example, can we take John Keel's or any other companies?
John Keel's also been taken. Yeah, it can be taken.
Yeah.
So we can see. I mean, if you.
These are sectors, isn't it?
Yeah, those are not sectors, no.
Yeah,
Now, diversified finance, it is been taken as a sector. Yes.
Right. Okay, sir. Thank you.
Right, then we will go to the next side. There you get the trade summary and all. Now these things are very important because you can get the real transaction type of things. Now just look at advanced finance. Right. Yes. Now just look at it. You see, the turnover, the daily turnover is given here. Now just look at the things you can gather from this table. Just look at it. Advanced Finance PLC. Now its code is given AFSLN 4 zeros, and then ISIN number is also given. ISIN is the International Security Identification Number, we call it. LKO LK0 388 00005, and its share price is 32.80 on the last trading date. It was an increase of 110 from the earlier date, and as a percentage, it's a 3.47 increase. The previous close was 31.70. So you can see how that return has been calculated. It has increased from 31.70 to 32.80. Right. Then you can see the turnover. I think the turnover is a small amount, no? 64,663.40, and only 1,991 shares transacted. Only 13 trades took place. The day's price range was this. So this is a good statistic. Then market capitalization is this much. And here they have given the market capitalization over the total market as a percentage. So this company contributes only 0.04% of the total market. That is what it says. So this gives an indication about the market leadership or whatever. Or we can say there's a particular concept called market makers. But I think here it may not be relevant, but what I want to tell you is, if a company contributes substantial percentage of market capitalization to the total market, the company has a significant say with regard to the market behavior. But in that circumstances, the advanced finance doesn't have that much of a say, because it's the contribution to market capitalization is only 0.04%. So we can just look at some other company and see what would be their market contribution of market capitalization. And just look at the other things here. The beta value. As per the fourth quarter of year 2021, it is only 0.53. And beta value against S&P 20 is 0.55. Now, what is the indication of those values? When you say the beta value is 0.53, so such stocks are called defensive stocks, because beta value is less than 1, which means the growth or the return of the stock is lower than the return of the markets. That is what it means. When you get a beta value which is less than 1, it indicates that the return of this stock is less than the market, lower than the market. Market in the sense, now here we have taken into consideration the whole share price index, not the whole market. But in the case of S&P 20 beta, there you need to deal with that S&P 20 companies only. So if you take all the S&P companies together, we can consider it as the market, and the particular stock, the advanced finance stock, is in terms of that market, their growth is lower. Now I will show you the real indication here. The advanced finance is the stock. Its price is 32.80, and its daily return, if you take the daily return, it is 3.47%. The daily return, that is, if you take it with respect to the previous day's closing point. So you can see whether the particular return has been calculated correctly. So just look at it, 3170 to 3280. So what is the difference? 3280 minus 3170. That is 1.1. That is 110. It is given, no? 110 divided by 3170. Yes, that comes as 3.47. Correct, no? 3.47. So that is how these things been calculated. Right. Anything, anyway, now I just want to show you these beta things and all.
So here this market capitalization, the meaning is for that particular day, or as a...
No, the market capitalization given with the all available stocks, number of stocks. So it's like, not that particular day's turnover. I mean,
Okay,
you are
okay. That
not
up
only
to
take
that
the
date. Up to that
yeah.
date.
No, it's like this. Say the company has 1 billion shares. Say company has 1 billion shares, but in that particular day only 100 shares been transacted. So that really contributes to the turnover of the day. Market capitalization is that day's price into the total number of shares available. That is 1 billion into the that. Now say for example, if Asps Finance has altogether 1 billion shares, right? So what is their market capitalization? 1 billion into 32 into 32.8. That is 32.8 billion would be their market capitalization. You get my point?
This here the market capitalization mean all the price of all shares into number of shares said something like that. No,
Yeah.
not only for Avance, all together.
No. Sorry. Now just look at it this way, right? Now just look at Asps Finance, right? Asps Finance, right? I will just give you the calculation also, right? Now here the market capitalization is given as how much? 2,183,219,594 cents 40, right? So then if you divide it by 3280, right? 3280 is the price, no? If you divide it by 3280, you can get the number of shares held by Avance.
So it's around 66 million. Is it correct?
Yeah.
66.5
That is the amount of shares held by the Avance. Held by Avance, right? So that is how this market capitalization is done.
So what about voting, sir? Now there are different types of shares, voting, non-voting. Or are we talking about all the shares? Or what?
Yeah, all the shares. Now, not in voting, non-voting, and that doesn't make a difference because in the market capitalization you get the price of the share, and it is being multiplied with the number of shares. Now, say for example, if a voting non-voting shares has a price difference, what would happen is now say for example, you have non-voting shares, another out of these 1 billion shares, say 200 million would be non-voting. Say, so it has a different. If it has a different price,
Yes.
so that price to be multiplied with that number of shares, and the other price to be multiplied with the other number of shares. That is how it is been done. But altogether, the capitalization is given. Get my point? We are only talking about the equity shares, right? Not the preference shares.
Right.
Equity shares only.
So why the beta value is bit different with SPI and S&P? Like,
Yes, it can be, because I will show you why. I think that's also a good question. Now just look at the way we calculate beta, right? How do we calculate beta? Can you remember? The covariance between the particular stock and the market divided by variance of the market return, right? So that is how this beta is calculated. Now just look at, now you can see, now Asps returns you can calculate, right? Asps returns you can calculate. Then you can calculate the market returns also. Now market returns you can calculate in two ways. One way is to calculate the market returns with regard to SPI. And you can again calculate market returns with regard to S&P, right? So then when you calculate beta for SPI, you need to get the market returns in terms of ASPI, right? And when you calculate the beta for S&P, you need to take the market returns regarding the S&P. Now you can see the market returns different for these two, no? Now market returns for ASPI differs from market returns for S&P. I can show that. Can you remember now when we just look at the earlier calculation, earlier sheet? Just look at it. First page, you see that, no? First page. The very first page. Just look at it. There you have the returns. The return indices are there. Now, just look at it. 6.88 is the market return in terms of ASPN. But what is the return of the market with regard to the S&P? 9.27. So invariably, then you will get a different beta value. No? Is that okay?
Okay.
Right. Now, do you need to get the I mean, you need to have a reminder. You need to remind that the way you calculate beta.
Yeah.
Can you recollect? Can you recollect the way that you calculate beta?
Yes.
I will just tell you. Beta is equal to covariance of the returns of bonds with the market, right? So when you calculate the covariance for the calculation of beta for ASPI, we need to get the covariance between bonds and the ASPI, right? And it has to be divided by the ASPI returns variance. Whereas if you want to get the beta for S&P, you have to get the covariance between bonds and S&P 20 and divided by S&P 20 markets variance. So that is how the beta of S&P 20 calculates, right? I can show it on the board even if you want. Because the way of calculation is different. No, I mean you get different numbers. That is why you get different answers. I will show another one. Another one I will show, and then you will see these two betas are different, right?
Sir, is it possible to put it on the board?
Yeah, I will do
On the
that.
board?
Right. Beta is equal to covariance of, now say we are talking about bonds. You can say AI, the market say ASPN. Covariance of returns. No? Yeah, also we are talking about returns. Divided by variance of returns of ASPN. Now, you know how to calculate covariance. Covariance is calculated by multiplying correlation coefficient. Now, you need to arrive at the correlation coefficient between bonds, finance, and the market into standard deviation of bonds returns into standard deviation of market returns. Right? That is what you have to do. And that has to be divided with square of the standard deviations of market. So when it is done for ASPI, we have to do this. This is ASPI. Beta. Beta ASPI. Now if you want to get another one, beta S&P 20. Beta S&P 20. This is calculated. Beta is equal to covariance, return of advance, and return of S&P 20 divided by variance of return of S&P 20. Now these two figures will give you two different answers. That is understood, no? Two different answers you might get. Is that okay?
Okay.
If you put the figures and do it, you will see that, right? Because those things can be calculated. Though all these things can be done practically. Now, say for example, you should be in a position to calculate the returns of a bonds, right? And you should be in a position to calculate the standard deviation of returns of bonds. Because if you go through the daily prices, you can do that. Daily prices, you can do that. Through an Excel sheet, you can do that. And next thing is, if you do the then you have to get the market returns calculated and the market's standard deviation calculated. So if you do that, you are in a position to get the row calculator, covariance, correlation coefficient. Now correlation coefficient is calculated by multiplying the covariance or covariance we can calculate either way. If you know the correlation coefficient, then covariance can be calculated. If you know the covariance, you can calculate the correlation coefficient. Whatever the way you can do. So that, of course, we did in other type of calculations. Now I am just giving you the practical aspects of these things. The way they calculate beta is the same, but we have already done. The ways are given that way. Right. I will show you another beta, and then you can get a good understanding about it. Right. Now, about advanced finance, and then we can get the financials if you want. Any announcements or whatever, you can just look at it and get all these things. So if you look at the financials also, you can get some idea. But now I am not going to do that. But what I need to do only is to just show you these different calculations we did in our lessons with regard to beta, and I want to show those things to give you a practical understanding. That is why I'm just doing this. Right, we will go to another one, other company. Right. So we can go. Right, Aitken Spence Hotels Holdings PLC. Or Aitken Spence PLC. Now there you see, their beta is very much, I think, the beta coming from the ASPI and beta coming from S&P 20, that's a big difference. Their beta is only 0.13 and with regard to SPI and 0.46 with regard to the S&P 20. Now you can just see the earlier company, the Advance, they had only 0.04% market capitalization contribution, whereas Aitken Spence had a 0.62% capitalization contribution. Now in that case, this company is a more bigger company. Right. Shall we go to another company and see what it is? Then we can go to a bank even. Amana Bank. Now this is only page 1. Now if you go to page 2, you can get some other companies. Cargill Ceylon Limited. Just look at Cargill's. They had a decline. Their prices, the previous day's price was 217.75, whereas their now price is 210. Just look at it. Now they got a beta of minus value for S&P 20. What is the indication of that? These Cargills, right? What is the indication of that? Their market capitalization contribution is 0.94. 0.94. Right, now their beta is minus for S&P. What is the indication there? Having the minus beta? Yes. What is the significance of having minus beta? Yes. What is the significance of having minus beta? Yes, can you answer that question? Minus beta, and it's a very, very small figure, 0.03. And how can we physically explain that? Yes. Yes, I need an answer from you. I think people are looking at this, and then you also can give an argument on that. Any type of so what I'm asking is, what is the indication what are the implications of having a minus beta? When you have a minus beta, what does it say?
So when the market is behaving positively, this share is behaving negatively.
Correct.
I mean,
correct. Yeah.
Going the other way.
Yeah, that's correct. Now, say for example, if the market records growth of so much.
Yes.
This stock records a decline. So, for example, if the market shows a 10% increase, this shows a minus 0.003% decrease. So minus 0.003 decrease. So that is how it can be checked. So the percentages, like you can see, when the beta is higher than 1, that means it is times. So if the beta is 2, I'm just looking at showing this way. If the beta is 2, if the market increases by 10%, the stock return will increase by 20%. Get my point? Now, market has a return growth of say 10%. The particular stock will have if the stock beta is 2, that stock will have a return growth of 20%. Double the market. And if the beta is 1, if the particular market return increased by 10%, the stock return also will increase by 10%. If the market beta is, if the beta is minus 1, what does that mean? If the market increased by 10%, the stock decreased by 10%. So the proportion of change can be checked through the beta. Is that okay? Right. Now, I will show you something else also here. So if you go to financials, or we can get, if we are not in a position to get the share price trend or whatever. Right. Now, on that particular day, the last day, that is just not yesterday, day before yesterday, turnover was only 580,662,000. That is the turnover, not a big turnover. And they had the share volume of 2,765 and they had only 14 transactions. Now, when you look at this chart, you can see these Cargills recorded a decline. And as a percentage, it's a decline of 3.56%. Okay. And again, we can go to the market and see some other, or even debt market we can look at. Right. Now you can see the details are given here. as of February 3rd, 2022. Now issuer means the company who issued that debentures. A date of issue is given. Now this particular one issued on 2021 or 20th August 2021. Coupon is 9.26%. Quantity issued 15,500. 15,500. Par value is 100. I think they issue different types of debts. I mean, with different yields. Coupon rates are different, right? So that's how they issued those things. Then ABNS is Avance. They also issued in 2019. They issued these things. The maturity date is given as 2024. 2.5 million. Each valued at 100. So likewise, you can just look at it and see. Now just look at the debenture issued by Bank of Ceylon. Okay. POC. One set of debentures issued on 2016, 29 December 2016. And value is, rate is 9.35, the coupon rate. Just only 200 they issued. Then they issued another 12 billion, no? Yeah, 12 million, yes, 12 million at 100 rupees. 100 to 1 rupee. Par value. Only 1 rupee. Now you can just see. Now all this information is available here. You can just get. Yep. Some of these been early settled. CDV. BFCC. ALIS. HDFC. HNB. HNBF. Protocol Plantation. So there are several. Right? That's another type of information available.
Sir, what do you mean by early settlement?
Early settlement means now when there's a maturity date, right? Now say for example, you issue on 2019 set of debentures to be matured on 2024. But when they issue in their prospectus, they say that it is a callable bond. Callable means if they think it is necessary, they will call it back. They will pay. Because the maturity is due on 2024, whereas if the issuer wants to redeem it before 2024, they can do that, provided they have given it in the first agreement. So those bonds are called callable bonds. Callable bonds, right? So since it is callable, the callable option we call it. If a bond is issued with the callable option, they are in a position to redeem it before the maturity. So early settlement is that. Or the otherwise, you can just have an agreement or work with them, and if they agree to get it settled, that is okay. That is also another way. The early settlement is now either way. Now, some of the early settlements are done since it is given in the agreement. Agreement, it says this bond issue is a callable issue. Callable means you can call it back. Call it back means you can redeem during the course. Now, even though it is being issued, given the maturity on certain year, say 2024 June, 30th of June 2002 is the maturity date. But if the organization who issued that bond finds it conducive for them to redeem it on 2023, they will make a notice to say that we will call back the ones on 2023 June 30th or so. So that is an early settlement in that case.
So they might be using different interest rate. If
Yeah,
it
yeah,
is
of course.
kept
Yeah.
until the maturity,
Yeah.
another interest rate, and if they are calling back, they will
Yeah.
issue another interest rate. Is it, sir?
No, it's like this. Now, that's as I told you earlier. Now, when a bond is issued, there's a term sheet. Term sheet is the agreement, right? In that agreement, those conditions are given.
Right, sir. Right.
Those conditions are given, and they say we have the option to call it back at any moment, provided giving the notice. I mean, if we do that, we will make a notice, say 1 month notice or whatever you give, and say we will redeem it. So that particular condition is made in the agreement. Then they can settle it as and when they want it, right? So that is how it can be done. That is one way, right? The other way is, even though the callable option is not there, you can talk to the party, and if they agree to settle it, the settlements, if they agree with that, then they can settle. That's another way. So both ways you can do a settlement, early settlement. There's no issue.
So is there a puttable option, puttable debenture as well?
Puttable means, say, you can issue a debenture. Is that the same? So that means you debenture, you just sell a debenture.
No, investor can early redeem it.
Investor.
Yeah.
No, it's like this. No, now all these debentures are traded, no, quoted in the market, no. So therefore, you can't do that. You can just sell it in the market. That is how you can do it. So what you say is the particular investor wants to get it back. That's what you say, no?
Yes, sir.
Investor now, when the investor pays money, he want to get it back, no? What you are saying is that, no?
Yeah.
No, getting back means now it can't be done, because what they can do is they can just sell it in the secondary market. That is what they do.
Mm-hmm.
It can be done. Otherwise, there's no way of doing it, because since the maturity, till the maturity, you have to wait. There's no other way.
Is there a trading summary for this also, sir?
I will check. Yeah, can be. Market, detailed trades, historical trades, past trades. We can look at the trades. Yeah. Trades are given here. But this is share trading, no, not the debenture trading. Yeah, it is share trading. You can say that history also. Read the history. I think we just check these things earlier. There's no other way of getting it. Now you can just read it. I think this gives a good information about this debt market. The Colombo Stock Exchange facilitates for the secondary trading of corporate and government debt securities. Participants have the luxury of carrying out the trading of equity and debt securities on a single trading platform. That is a good thing. Now, the transactions can be made in the same platform. You can do a transaction of equity or a debt, either of that, in the same platform. For debt securities, investors have a choice of doing trades on two separate settlement boards. TOM board, that is what you call settlement on T+1, or spot board, settlement on T+2, normal settlement. No, what is that? Now, when you purchase a debenture, what do you mean by TOM? What do you mean by TOM? TOM is
Tomorrow.
not the place. Tomorrow. Yeah, tomorrow you are going to settle. You pay money tomorrow. And we call it T+1. Then spot, the other one. That is T+2, day after tomorrow. That is a normal settlement. So if you purchase a bond, in general terms, you need to settle it on day after tomorrow. But there are some occasions, if you like, or if you prefer to do it, you can do it. And we call it TOM board, and that is the tomorrow's settlement. That is what you call the TOM board. The other one is called the spot board. Accordingly, cash settlement can be done on T+1 or T+2, and debt securities settlement is on DVP. Now, what do you mean by DVP? Delivery versus payment. DVP is that. Now, debt is an instrument that is delivered while you pay. So, when you make the payment, you will get the instrument. Participants also have the facility to do negotiated trades through the crossing board. The following list shows the latest trade details of corporate debt securities that are currently listed on the CSE. Now, you can, if you want, you can download the report here to see that what type of trades taken place with regard to debts. Right, good. I think now we have taken a good number of information from this, and I will show you something else also. Now, if you look at this with listed entities or new listings, here also you can just look at some, if any primary issues taken place, there you can just look at it and see what are the primary issues took place in the close past, or any secondary issues being made. No secondary issues as it is. Now you can just look at this. ASPI statistics. Now this is for the 1 day, right? Now you see how it really changes during the day itself. Now the times are given. Yes, this is 11 o'clock, 12 o'clock, 13 is 1 o'clock and 2 o'clock. Now is about 10:30 or so it starts. No? Not 10:30, 9 o'clock or 9:30. Now you can see ASPI going down here, and it is enhancing, increasing. Here. Now you can see the ASPI statistics for the last day. It starts with 12,600 and it went up to 12,800 or so. 803 years. That is recorded at 2:30. Now see the point. Now the stock market closed at 2:30 on 3rd of February, and at that time the ASPI, that is all share price index, it is 12,803 and cents 57. And you can see at what time it started. It was started by 10:30 on 3rd February, and it was started with 12,584 and cents 02. Then the particular day's return statistics also to be calculated. 12,803.57 minus 12,584.02 divided by 12,584.02. That will give you the daily change of ASPI. S&P also the same. You can look at it that way. And financial reports you have non-compliance disclosures, buy-in board disclosures, new listing, CSE circulars, SEC directives, and all. Now, when you say corporate disclosures, now these particular companies have some disclosures. And when financial reports, if you want, you can just get those things. Right. Now you see, this is the last day's the point where the ASPI recorded as 12,762.60, and it's an increase of 178.58. There's an increase of 11.42%. S&P 20 started ended with 4,333, and the change of 112.60 and 12.67% increase in the share volume. The noise. So there was a good turnover in that particular day. Right. Now, when you go into the market data, top gainers and top losses. These are the top gainers on 3rd of December. Sorry, 3rd of February. Now their percentage change is 25.86. Price change is 980. Now, as it is, you can see, I think this is COC. Let's see what it is. Yeah, commercial, credit, and finance. Right? They are the people who had the highest share price increase on 3rd of February. That increase is 980, and as a percentage, the increase is 25.86%. Commercial credit. Now their beta value. SPI regarded beta value is minus. S&P regarded beta value is positive, it's 0.32. There two beta values are little close aligned.
Excuse me, sir.
Yeah.
How can be a finance company getting a minus beta value? Because it's dealing with money, and how can that be?
Oh, even though they deal with money, they are not doing, say, I'm not saying they are not doing well, but the beta value minus, the meaning is their returns are normally the other way about. Now, in other words, we can say when the market goes up, their returns go down. When the market goes down, their returns might go up. So likewise, that is the way. But I think even we record it that way, the value is very, very less, minus 0.34. So that means it's, they don't have that much of a variation in value as per the beta. I mean, the market and the stock may have more or less similar trend in their returns. Since the value is very, very low, 0.34, but we can't say it is very low, but it's a certain amount. But we should not be so much alarmed because the beta value is only 0.34 numerically. But we have to bear.
So what is the meaning like having beta against the SPI? Like,
No, the meaning is, as I told you earlier, that what we are looking at is we are checking the correlation the stock is having with the market in relation to the market's variation.
defensive, right?
Yeah. So it is a defensive, but even though it is defensive,
Yes,
they have a opposite type of a return.
right.
Opposite. Yeah.
Sir,
Yeah.
if I say like this, now all the other, apart from the commercial credit, all the other finance companies, including commercial banks, if they are growing, right, if they record a growth, that means the customers or the investors are shifting to that finance companies. So they are not interested in commercial credit. But when the growth is slow in the in the other finance companies, then the investors tend to get their interest on commercial credit. Is it so?
Yeah, it may be. I think now here the particular minus thing may be a reason that these people would have had a decline in earlier situations. Say about 6-7 months back, they had a hard time. Now they are recovering from that. So I think that is what I can gather from this. Because they have been, I can remember about say 2-3 years back, they were not in the correct form. Now I think they have come to a certain level, some sustainable level they have come. But this beta value shows they have come to that level. But if you are in a position to see the historical beta values of this firm, you can take a decision. But just looking at this, we can't say anything. You get my point? Because this minus 0.34 shows only for the time being in the sense that for the last quarter of 2021, that there's a tendency, their returns go against the market returns by only 0.34 times. So that is what I can tell you. It's a little against the market. I'll say the market increases by say 1%, their return will decrease by minus 0.34 from 0.34 only. You got my point?
Yes, sir.
So that is what it means. But it doesn't say that they are having a declining trajectory. Because the beta doesn't mean that. Beta is only an indication of the risk. It doesn't show anything about average return also. It just gives some idea about the risk, the systemic risk or systematic risk we call it. So it gives that indication only. So therefore, what we can say is, we can say that the commercial credit, their returns are little negative. Negative in the sense, if the market goes up, they will have a little negativity. For example, if the market increases by 1%, the market return increases by 1%, they will have a decrease of 0.34%. 0.34%. So in other words, they will have only a 34% type the other way.
And sir, when I was going through the other website, I saw that to get a minus beta, you should be dealing like in gold, like commodities. So because the gold, the investors will be shifting to gold when the markets are going down. So is it correct, sir?
Yeah, that can be a reason. But we will check and see what are the other companies who are having recording minus betas, right? So then we can take a decision, right? You agree with me? Now yes, we can just look at this. Go through this website and see whether what are the particular companies who record minus betas, right? But on the face of it, it looks like this particular company is doing well, no? Commercial credit and finance, it looks like they are doing well for the time being, right?
Yes.
Even if we can go to the financials also if you want. We can go to financials here. Annual report. So I think this would be a composite type of thing. So what I can do is I just assign you that. If you want, you can do that. But what I want to tell you is we will have a better analysis by looking at the companies which record minus betas. And you can see when you look at the beta in terms of S&P, it is not minus, it is 0.32. So what I mean here is what I suggest is, since it is a decimal figure, 0.34 like decimal figure, we should not be alarmed by having a minus beta here, because it shows a very moderate type of a change. I don't think that could really affect the company's what you say, solvency or whatever. And you can see the market capitalization. The contribution is also 0.26. That's a rather a fair level of contribution. I think they have come a long way. What I feel is that commercial rate. I can remember about 2-3 years back, they were in a very bad form. I'm really giving my opinion only. It's not really given no standard type of opinion, but it's my opinion, right? As it is now, when you say that the gold, dealing with gold or whatever, may have this type of peculiar things, but I can't say point blank that is the case. That should be the case, but as it is, we have to check. I am not in a position to say that that could be the main reason for this. But anyway, I think your approach is really noteworthy, and you need to think in that manner as an analyst. I think those thinking patterns are very appreciated. So if you can do that, I want to just get others' opinion also, because you can talk if you want. Because that is why I am just taken trouble to do these things. I mean, rather than put in printed lessons and all that. I want to go to these websites and just have a look and then just tell you how to really deal with these websites and how you can gather information from these websites. That is my intention having this type of sessions. Right. Now I think I will just go to a international type of a website. Yeah, you can get the information with regard to the global stocks. For that, I want you to go through the Bloomberg. And before going into the Bloomberg website, I will show you something regarding Bloomberg. Okay. Can you see the things on the board?
Yes.
Right. I want to just show you this because I have seen in many financial organizations, including the banks, in order to do transactions in the domestic market and national markets with regard to the equities and fixed income, securities, they use Bloomberg terminals and they use Bloomberg platforms to do the transactions. Now, not only transactions, they can gather information, economic information, financial information, all sort of information can be gathered through Bloomberg terminals. Now, for that, you need to have some idea about the Bloomberg terminal. I'm just giving you a certain publication where they explain about the terminal. I'm not going to read it all together today, but I just want to show you that there's some publication or some text on that, and you can read it and get a good idea about Bloomberg terminal and what can we do through the Bloomberg terminal. So that is why I have just taken it here. Now it says Bloomberg for education. Education is financial education. Right. Now the contents. Now it gives good details about Bloomberg terminal. Now, of course, individually no one can have a Bloomberg terminal. Your institutions may have Bloomberg terminals in their dealing rooms also. You work for such an organization, you would be in a position to have a look on the Bloomberg terminal. Now, especially if you are in a bank. The banks, most of the banks in Sri Lanka, they use Bloomberg for their information purposes and other transaction purposes. So then you have a greater chance to have a look on a Bloomberg terminal in your institution. So if you are not working in that type of unit also, what you can do is you can just talk to one of your friends and ask them to just show you that and have a look on that. Then you would be in a position to really see how you can make use of that terminal for your analysis work or whatever, financial analysis. I can remember when I did lectures for University of Sri Jayawardhanapura, I took those people, the undergraduates, the Bank of Ceylon dealing room, and I showed them the Bloomberg terminal. They were very much excited with the terminal, and they just realized that it's a very interesting type of a field where they can learn so many things. And as a result, about 3-4 persons later joined the Bank of Ceylon as management trainees with that interest. So what I'm telling is, if you develop some interest on these things, you would be in a position to take up the things and take up any challenge with necessary type of the competencies. That is why I'm just giving all these things to you rather than just covering the syllabus or whatever. These are very much practical. And I think in order to deal with international finance, you should have this type of, this knowledge is very much important for you. Deal with international transactions. Right. Now it explains about the Bloomberg terminal, then the functions and securities, the navigation, then how you perform analysis using the Bloomberg terminal, then exporting of data, then Bloomberg market concepts, getting help and learning more in functions. So I think I just asked you to read through that text. The keyboard is here, so they just explain the key, different keys and all. Just like a normal computer keyboard, the terminal. Now this is the normal appearance of the Bloomberg terminal. Top story selected by Bloomberg. Now those things are coming on the screen. Right. This is news. I think most of the time now they select the most critical news regarding investment and different stocks or whatever. They just publish it on the screen. You have a toolbar, command line, function area, and so forth. Right, now I can just give an example here. Now there are different mnemonics or codes given. WVI is the mnemonic for the World Equity Indices Analysis Function. Now, there are several indices, equity indices, used in different markets in the world. To access this function, enter WVI Go. The mnemonic for the function in your selected window is always displayed in the toolbar. Here, now this is the toolbar. Now here you can see the names of the international indices are given here, the equity indices. Dow Jones, S&P 500, Nasdaq, Composite, PM with IPC. There are several. Now those are given. Then the volatility is given. Ratios are given. Futures or whatever. So different information can be gathered. Securities. Navigation is how you deal with that. Right. So I'm not going to go through all these things. What you can do is you can read it leisurely, and you should be in a position to get some idea about it. And I will now give you a break, and we will start by 3:45, and afterwards I will go to the international equity markets and then get different data and different information and indices and all that, and I will tell you how you can get information from those websites and all. Then we can have a better understanding about global type of equity markets and the fixed income security markets. Right, we can have a break now. By 3:45 we can start. Can you see the, now we have come again to the session. Can you see this on the board, on the screen? Yeah. Now I have just gone to the website of Bloomberg and just look at it. And I just get the stock markets of stocks. And in this website, you can go through different markets and the whole globe. The global markets been divided into three different sectors. Americas, that is in America, South and North America. Then EMEA, that is European, Middle East and such markets. Then APAC, that is Asia Pacific. So if you go through the Americas, then you can just look at the different indices which are in use in those markets, American markets. They have Dow Jones Index. We call it Dow Jones Industrial Average. And then they have S&P 500 Index, Nasdaq Composite Index, NYSE, that is New York Stock Exchange Composite Index, S&P TSX Composite Index. Those are the main indices which are in use in America. Now you can just look at it. The index value is given, net change is given, and in respect to 1 month change and 1 year change given. The time is 4th of February, as it is 4th of December, 4th of February, Dow Jones Index, Industrial Average. The value stood at 35,089 and cents 74. The net change is a negative change, that is 2142 numbers, figures. Minus 2142 is given as that is the net change. And percentage change is minus 0.06%. If you take 1 month, 1 month change is a decline of 3.15% decline. Whereas if you take 1 year, it's a growth. It's a growth of 12.65. That is with regard to Dow Jones Index. Then you have S&P 500 Index. There you have a net change of 23.09, that is positive. And percentage change is 0.52%. But if you take 1 month, they had a negative change, that is minus 3.77. And 1 year, 15.79 positive growth. That is the index, S&P 500 Index. I think in most books and all, when you discuss with regard to the financial analysis, most of the time you go to the S&P 500. I think in textbooks also, S&P 500 is given very frequently. So then, what is it all about, this S&P 500? Now, really it is a index which has taken into consideration 500 top level firms. So that is what it means. So that is the S&P 500 index. Then there's another index, and we call it Nasdaq Composite Index. There also you can see the differences. So, and out of the 5 stocks indices, only one index reported the net minus change. But all of these indices reported positive changes if you take it for 1 year. So that is in American continents, different stock indices. If you take Europe, Middle East and Africa, So that is what you call EMEA. There you have Euro Stocks 50 PR, FTSE 100 index, DAX index, CAC 40 index, and IBX 35 index. Those are coming under Europe, Middle East, and Africa.
Sir, excuse me. What would be the reason for a minus net change?
Here, minus net change means, say, for example, you are asking the physical reason or?
Yes, the physical reason.
Yeah, physical reason is of course now when the index is a representation of all the stocks in the index, all the stocks in the particular exchange. Now, for example, now if I take S&P 500, there are 500 companies listed there in that particular exchange. Now, when the prices of the particular index changes, now it can be a price increase by each share. If you go by each share, the prices might increase of some of the shares, and some of the shares the prices might decrease. But if you go through the market capitalization and all the way, if you get the whole market capitalization and see that the positive market capitalizations come in with, or positive side comes with price increases, negative side comes with price decreases. Now, if you have more negatives in a particular day, you will end up with the lower index. Lower index. Now, for example, say on February 1st, you recorded the index value as say 35,000, say 4,500 is 53 is the today's one. On say on February 1st, it was 4,508 and 53. If that is the case, this is a decline, but it is not the case now. But if I take Dow Jones Industrial Average, there you have the value as 35,089.74. But what is the change? It's a negative change, 2142. So then what is the earlier days index value? It is 35,089.74 plus 2142. So that would be the earlier days index value. So index value at that level, and it has come down to 35,089.74. Because of that, you record it as minus 2142. The physical reason is the shares available in that particular exchange being devalued or come down in price at a higher level than the prices went up. So the net result is a negative result. That is why the index become negative, or the change will become negative. Got my point? That deals. No, you have to just look at the prices. Yeah.
Yes, sir.
Is that okay?
Yes, sir.
Right.
So what is the difference between net change and the change?
Yeah, net change means because net. Now here the net change means now you have taken only two things here: earlier days index and this day's index. The difference is taken as net change because the percentage change is we don't call it net change. The net means we just do only a deduction. That is why we call it a net change. The net means that now, as it is now, what you did was 35,089.74 minus the earlier days one. So that is what you call net change. So the net means here is the difference between the 2 days. But percentage change is different. So there what you do is there you just calculate the percentage. Now you can just see whether it is correct. How do you get that? Can you do that? And verify whether it is correct. So what you have to do is, say, you need to get the earlier day's value, no? Now, this is on 4th of February, right? The independent day, they don't have independent days that day, but our independent day, no? Anyway, now February 4th, their index value is, I'm referring to Dow Jones, right? Their index value is 35,089.74. 35,089.74. And what is the net change? 2142. So therefore, if I add 21 to 42 here, now we get the value 35,111.60. So that should be the value
Previous day closing.
on the previous day. Yes. So then in order to get the percentage change calculated, what should we do? We should divide 2142 by this, right? 2142 by this. You get the value 0.0006, right? So then what is the percentage change then? 0.0006. That is in decimal form. If we convert it to a percentage, you will get 0.06. That is correct, no? 0.06. That is the answer. The change. You see the point now, right? So that is how these things are calculated. And you asked why it would become negative. The reason is that really depending on the prices. The prices has been changed. Prices been changed, and in such a way, the index has come down. That is the reason.
So that means it is the price changes, like it's a global effect, something like that. Not only that will have an impact on Sri Lanka, but it is a global effect, no?
Yes. No, I'm that's the thing. Now, even now we are now referring to the international markets, no. So therefore, it doesn't have. There's an indirect effect in the Sri Lankan markets also, indirect, right? But here the things are more or less confined to their markets for the time being, right? But in time to come, the particular effects will be transferred to some other markets also. That will happen. That will happen. So that is why we need to go through these things also, because we have to just look at the trends and whether these trends affect our markets also. So that is what we need to think. In the Sri Lankan point of view, what we need to do is we need to check the trends of these markets and these indices and see whether any indirect effect would be possible in time to come. That is the reason we are going through these things also. Now, just look at the Middle East, Europe and Middle East. There are very famous indices here: 1, 2, 3, 4, 5. There are also 5 indices given, but all the indices are having negative change. Yeah? All the indices having negative change. Now, as a whole, what we can see here is this area, this Europe, Middle East, and Africa. It represents some downturn. That is the idea we can gather from this. And if you take Americas, it doesn't have that type of indication. It indicates that they are doing well. Except for this Dow Jones, all others are in the positive side. But Dow Jones also, their 1 year returns are positive. 1 year returns are positive. So therefore, you can see when you take Americas, they are in good shape than the Europe, Middle East, and Africa. If you go to Asia Pacific, they are also if you go by the net change or whatever, there won't be any issues. There also the scenario is positive.
So is it currently there? This 27,000 is amount.
Yeah. Now actually the thing is that particular value is calculated on the basis of a certain currency. Now that depends on the particular country where that exchange is situated. Now, for example, now Colombo Stock Exchange calculates this all share price index, and that index is calculated on the basis of rupees, no? Because the value is given in rupees, no? Now, as it is now, if you take Nikkei, or if you take now Nikkei is a Japanese one, so now they calculate the index in terms of Japanese yen, right? So that is how it comes. Now this what you say, Dow Jones is calculated on the basis of American dollars. So that is how it goes. That is how. So therefore, there's no real meaning if you go to the numbers, but that meaning comes into only the particular exchange. Now Sri Lanka, we have now 12,000 something, no, our index. Since our stock market situated in Sri Lanka, the index valuations are being done on the basis of Sri Lankan rupees. Now, index valuation of say Americas, basically, say Dow Jones or S&P, all these indices been calculated on the basis of US dollars. That is how it goes. Even Nasdaq, all are in US dollars. But don't take any idea now. It doesn't give any rupee value base or dollar value base, but it's calculated on that basis. That is what you need to think. Now, in the same manner, if you go to Europe, now Euro stocks 50 PR or so. So that is another index, no? So now in that index, they do the valuations on euro. Even FTSE, DAX, all are in euros. The index is calculated on the basis of euros, because the market capitalization is measured in terms of euro. If you take Asia Pacific, the Nikkei is a Japanese index. So then there the market capitalization is calculated on the basis of Japanese yen. So therefore this index is also in terms of Japanese yen. Right. Now, those things actually, there's no big issue there. You can just think in that terms.
So all share price index, right?
Pardon? I can't hear you.
And others.
What you have said?
All those index are.
These are not the prices. These are all these index are, yes, I mean based on prices. Yes, based on share prices. Based on share prices.
What about derivative markets? Because other they have derivative.
Yeah, derivative markets also. Yeah, we can get into that also. Now here it says futures. So if you want to get the derivatives, we can go into another link, and we can go to that markets also. Since we have not done with regard to derivatives, so therefore I have not gone into that. But the futures markets, options markets, and all those things are there. That also we can verify if you want. But I think the Bloomberg have a better focus on stocks and the fixed income securities.
So where we can see the fixed income securities like Sri Lankan sovereign bonds prices and all there?
Yeah, it is there. I think I can give you that.
Yes.
Bloomberg markets, and then we can go to so we can type Bloomberg fixed income markets. Bloomberg income securities. Says the fix. Now they have just given the bonds of US 3 months US bonds 0.22, 6 months point. Now this is the yield curve for US bonds. Now they starting with 3 months US dollar bonds, 6 months bonds, 2-year bonds, 5-year bonds, and 10-year, 30-year. That is given.
Sri Lanka's sovereign bonds also price is available here.
Wait, I can see that. It is not given in most of these markets. Now these are the fixed income indices.
Okay.
These are the indices, but you take Australia. All these things are given here, but Asia Pacific, right?
So what is the bond in Singapore?
Here, 10-year government bonds. Now you can see it is 1.76% is the interest yield, right? You can just see Singapore, 1.76%. It is in Singapore dollars, and this is the yield because they have given it on the basis of the yield. One day there's a 4. If you go 4 basis point difference. In 1 month it is 6 basis point difference. For the 1 year it is 72 basis point difference. And if you take India, you can see their government bonds 6.87%. That is the yield for their government bonds. India.
So what about Sri Lanka?
But I think the Sri Lankan bonds are not given here. But you can get the Sri Lankan stock markets something. I have just look at it anyway. I will just show you. When you go to the stocks, and I think it is possible to get the stocks. Japan, China, Hong Kong, South Korea, India, Taiwan, Australia, Pakistan, New Zealand, Malaysia, Indonesia, Singapore, Thailand, Vietnam, Bangladesh, Mongolia, Laos, Philippines, Sri Lanka. Okay. Yeah. Now just look at it. CSC all index they call it, but they have not given S&P 20 here. The value is 12,762.60. That is the index value, and net change is taken as 178.58, and percentage is change is 1.42, and 1 month it is 30 minus the minus 0.30%, and 1 year it is 54.80%, 80%. Now you can see, now this is a very good indication of Sri Lanka here. Just look at Philippines. They have only one index. Laos, one index. Mongolia, one index. Bangladesh, one index. Vietnam, two indices. They have two indices. One is HNX index, other one is Ho Chi Minh. Because in Vietnam, the capital is known as Ho Chi Minh City. Just like Colombo, they have Ho Chi Minh City as the. Now, in Ho Chi Minh City, they have their exchange, stock exchange. That is why they put it as Ho Chi Minh Stock Index. Actually, those days, the particular city was known as Saigon, Vietnam. After this, Vietnam got independence from American army. The person who saved or salvaged Vietnam from US rule was called Ho Chi Minh. Afterwards, that city was named as Ho Chi Minh City. In Vietnam also there are two indices, but ours S&P 20 is not given here. In Thailand also there are two indices. Singapore also there are two indices. FTSE is there. Straits Time Index. Then Indonesia, Jakarta Composite and Jakarta Ilkin. Malaysia, Bursa Malaysia and Bursa Malaysia EMAS. Now you can see New Zealand. Now they have issue. I think all the indices are in negative side. New Zealand.
Australia.
Yeah, Australia is there. Pakistan, I think all are in positive side. Australia is here. They are also in positive side. If you take 1 month, the things are negative, but 1 year it's okay, and the net change is also positive. Everywhere positive. They have S&P. Taiwan, India. India, you can see there's a gloomy outlook. All are negative. Net changes are negative. Even the 1 month change is negative. 1 year change is okay. Those are positive. So that means that long term they had no issue, but they are facing a short term issue. I think India. They also have S&P. BSE is the Bombay Security Exchange. Nifty also they have. All are taken as S&P. Now S&P 500, S&P IDX, BSE 500, 200, 500 and all that type of things are there. Sensex. Then South Korea. There are several indices in South Korea. Even China, Hong Kong. You can see how many indices are there. Now Hong Kong is doing well. Yeah? They are doing well. China also they have issues, no? Yeah. In terms of the stock market, I am talking about. Then Japan also has some positiveness. Now we will see. If we take one index taken into consideration in India, say. So we take BSC 100. Now this is the BSC 100 index. Now these statistics are also given in that market. The PE ratio goes as 25:16. Price to book ratio goes as 3.6346. Price to sales ratio goes as 2.76. 1 year return goes as 19.82. No, this is the market return for this one. Yeah, now checking India's S&P BSC 100 index. Right. Last dividend report, 0.633908. Earnings per share, 707.62. Now all these are averages. All these are averages. Right. Now you can just look at these narrations with regard to different indices or index. Now there's a description given here. A broad-based index, the S&P BSC 100 was formerly known as the BSC National Index. It has 1983-84 as the base year and was launched in 1989. Together with the other BSC indices, it was shifted to the globally accepted free float methodology, effective April 5, 2004. The computation of index prices and determination of free float factors is similar to that of the Sensex index. Now these things are given in quite fair level of explanations. Right, now we can just look at our Sri Lankan index and see how they explain about it. Now, just look at it through the Bloomberg. Right? I think these people are not going to give it now. Okay. Right.
So now see Sri Lanka sovereign bonds, we can't issue sovereign bonds since the currency is LKR.
Yeah.
Then our sovereign bonds are listed at some other exchanges.
So,
Is it?
in a certain time, those been listed in Singapore exchange.
Okay.
Sri Lanka, but in Sri Lanka also the sovereign bonds issued, I think, to the, because though it is been issued in Sri Lanka, but it is been really
Listed.
transacted in some foreign place. I think those information we can get from the Sri Lankan central bank's website, Central Bank of Sri Lanka website. We can get those things. I think that's a good question. I mean, we can just get those details even. If you go to the Sri Lankan Central Bank of Sri Lanka website, we will be in a position to do that. Now it's like this. Now I will just show you that. I don't know whether internet connection was lost.
It's connected. We just put Central Bank of Sri Lanka. I think.
No, normally it comes, I don't know.
Is it?
Central Bank of Sri Lanka.
Yes. cbsl.gov.lk. Now you just look at this thing. Now say the government debt situation is given here. So what we can do is government securities. Right? Here you get Sri Lanka development bonds here. Yes.
Now you can just look at the main features, right? Sri Lanka, very good question I think you have asked. Sri Lanka development bonds, main features, democracy, US dollar. Now the maturity periods are 6 months, 10 months, 1 year, 1 year, 3 months, 2 years, 2 year, 3 months, 3 years, 4 years, 4 years, 6 months, 4 year, 11 months. The type of securities bond, placement based, interest rate, fixed rate arrangement from period for subscription from 25th January 2022 to the opening of the next SLDB auction. Right? The interest payments are made semi-annually. Minimum investment is US dollar 1,000 and in multiples of US dollar 1,000. Now you can see the issuing office is Public Debt Department, Central Bank of Sri Lanka. So then the monies have to be sent here. Selected licensed commercial banks and primary dealers.
So what is the rate of this bond?
And
What is the rate of this bond?
the rates can be negotiated. Like now it says like this, no, here. Interest rate, fixed rate arrangement. Yeah. Fixed rate arrangement. Now arrangements can be made by the investors. The investors are the people who just invest in these bonds. Basically, the people are who are the designated agents to purchase bonds. Selected licensed commercial banks and primary dealers. These are the people who now these are the agents to sell the bonds. So if someone wants to purchase a bond, they can just give money to the particular commercial banks and primary dealers and get the bonds.
So these are the primary dealers. They
Yeah, yeah,
get this bond from the primary market
yeah,
and sell in the secondary market.
yeah. Paying agent is Bank of Ceylon, and governing law is the law in Sri Lanka. Only thing now this is designated in dollars. There should be a dollar account. That is the only case, I think. The dollar account has to be maintained somewhere, some country or whatever, or even Sri Lanka. We can maintain no dollar accounts because the bank can maintain a dollar account. Bank of Ceylon or some other bank can maintain dollar accounts.
So there is a difference between sovereign bond and development bond. Now, development
Sovereign bond, yes.
yes, this is development bond. But sovereign bond should have been,
We can see that also.
yes.
Treasury bill ones for investment officers, development, outstanding debt securities, daily market operations, treasury bill actions. There was a sovereign bond issue, I think, not. I think last year also there was an issue, I think. Anyway, we can just look at the policy, financial system.
And the cooperatives.
I think it is coming under government securities, I think. Public debt department. Anyway, we will see the outstanding debt securities.
Okay.
Here. IBSL outstanding debt securities as at 30th June 2021, right? Outstanding stock of treasury bills, outstanding stock of treasury bonds, outstanding stock of rupee loans, outstanding stock of Sri Lanka development bonds, outstanding stock of international sovereign bonds. Right, now you can see. These are the outstanding sovereign bonds in Sri Lanka. But these might have been now matured already. But anyway, you can have a look at and see what it is. And it is given as the ISIN is given as USD, so it is in US dollars. That is why you put it that way. These are the coupon rates. You can see. Oh, now, can you give any comment on this? I mean, when you look at it,
Too high, no, compared to the market.
Very high.
International market.
Very high.
That's right.
Yeah, I think you just look at that. I just showed you the Bloomberg's this thing, no?
Yes.
So there you just about 1 point or something, no? The rate interest rate is point something, not 1 point even. Now we have to pay. I think here you have the highest 7.85 also here. 7.85 also here. So it's a real debt burden for Sri Lanka. So high interest we have to pay. Now when these things are coming into maturity, then the Sri Lankan government has to find out dollars to pay that. Otherwise, the Sri Lankan government will be noted as a default. This is the issue. Now, I think here the maturity dates are given as, he is the only one still there. Even there's another one maturing on 25th July 2022. So $1 billion here. See?
Sir, what about other countries? Are they paying lesser amount?
Yeah, of course. Now I think you
What
can
is the
now.
range, sir?
Yeah.
For
Even I
coupon
don't
rate?
know. In India also, I think they have these sovereign type of bonds, but they don't pay so much because that all depends on our credit rating. We call it sovereign rating, no? The Sri Lanka sovereign rating is now CCC or CC plus or something, not even CCC. So because of that only, we need to pay so much of interest.
So when our ratings are going down, to make it more attractive, we have to give a higher coupon rates.
Yeah, of course, yes. Otherwise, it will not be traded in the markets.
Yes.
That is the reason.
But when the coupons rates are high, others will also know that this investment is a risky one.
Yeah, of course. But even though that they are, in reality, people, even the international community has a fair trust on Sri Lanka, because Sri Lanka has not defaulted any loan for the last couple of years. Because of that, the international community has a little trust on Sri Lanka, even though the rating has gone down. That is the only positiveness I can see. Because for the history, Sri Lanka has not made any default. Whatever the way they may paid the loans, say they have to get more loans to pay the loans. No, that's what the Sri Lanka is doing. So they have to take the more stringent type of loans to pay back the existing loans, and ultimately we have to have more loans in time to come. That is what's happening. The sovereign bonds also a part of the loan stock in Sri Lanka. Now you can see here there's a total of $14 billion. This is the outstanding sovereign bonds. Just imagine, it is not in rupees, in dollars. $14 billion, right? $14 billion. See the point now. We can even just check the outstanding debt.
So how did you go to that this thing link?
There I just wrote it this way. EOSL outstanding.
Yeah, how yes.
That is based on the first page. No? EOSL outstanding debt securities.
Okay. How to go to these things? That's why I asked.
I will go to the first page and
Yes. Just like yes.
Here you have EOSL outstanding. Now this is the first page, right?
Okay.
That comes under the government securities. Yeah, you get EOSL outstanding debt securities.
Okay.
Now I can just show you the outstanding debt as at 31st December 2021, right?
Yes. It's 13 billion, no?
Yeah, now you can see.
Yes.
Treasury bills are there, treasury bonds are there. So I think this is a very good indication of the types of debts the government is having. Treasury bills are there. Now that is part of rupee debts. Treasury bonds are another part of rupee debts. On the rupee loans, then you have outstanding stock of Sri Lanka development. That is not in rupees, that is in dollars, right? Now, I think the Sri Lankan government get the dollar liquidity through these things. Outstanding stock of Sri Lankan development bonds. And the other one is the outstanding stock of international sovereign bonds. So I will just get international sovereign bonds this way. Right. Now you have this. This is the as at 31st December 2021 sovereign bonds, right? Now there you have 13 billion. Now this is what they were talking about. These politicians talked about 18 January one. This is the 18 January one. No? Can you remember? People are talking about this, no?
Yes, yes. We have paid that, no?
Yeah. 500 million is there. 500 million, that is 18 January 2022. So these things are really interesting to look at.
So where those are trading outside the Sri Lanka?
No, of course, now these things is available in the market in dollar terms.
In Singapore exchange, so
And of course, but the only thing is now these sovereign bonds actually there's a way of selling. It's not the these are in the secondary markets. This is in Singapore, more or less. Yeah, in Singapore exchange it is being sold.
So there was another template earlier. It was bonds, Sri Lanka sovereign bonds, or what? This is another one, international sovereign bonds.
that is
Yeah,
development.
international. No, the other one is the Sri Lanka development bonds.
What is the difference of this?
No, development bonds actually now those are being given in another. Now they have another term sheet. I just showed you that term sheet because that is not in an open market type of a thing. Right now, this is an open market type of a thing. So that is not an open market type of thing. They have a fixed interest rate also, no. So therefore, it is not a open market type of thing. We call them captive sources. I mean, the captive sources only that have that type of a development bond. But here it is a sovereign bond and it's international bond. So therefore, it is available in the international markets.
So we have to list these things in an international
yeah, of course, yes.
exchange, is it?
Yeah.
Now, if we look at the SLDB bonds, there are quite number of outstanding where need to be settled on this year. That means that also big
so that's a different way, but it is also a burden for the government. No, I can just see that also.
Yeah, it's almost quite amount. Number is big. 2,200.
Stock of Sri Lanka development. And stock of Sri Lanka development. Yeah. These are Sri Lanka development bonds. And the rates are given floating on some of the rates. Some of the rates are fixed. Yeah. You can see the maturity dates. 22nd January also there. 9th February. 17th. There's a series of bonds to be paid. Right now, the things have been, traded like this. Now you can just look at this summary. Now, even in Sri Lankans taken those sovereign, sorry, not sovereign, the Sri Lanka development ones. Banks have taken 2027, that is 2 billion bonds by banks. Non-bank entities took 232 million, and individuals taken 11.47 million. in Sri Lanka, residents of Sri Lanka. Non-residents, the banks 21.92 million, non-bank entities 1.9 million, and individuals 0.5 million. Now, I think this really shows that, right? Can you give any comment on this? Can you give any comment on this?
Banks are holding majority of
Very high majority of Sri Lankan banks. So I am not going to say any other international bank, because it really is not worthwhile for the country, I think, because it is the country's available dollars only being given, not from outside. That's what I am telling you. No, even when you say dollars, those are coming from outside. That's correct, but those are the residents, no. Now residents, now they had dollars. No, those dollars only been kept here. But if you take outside or external sources, it's only a small amount. Now say altogether it's 2,295. No, out of that 2,027 coming from Sri Lanka itself. Only 24 million came from outside. That you can say, you can see, no?
Yes.
What do you say? So therefore, I mean, it is not worthwhile to have this type of a thing. But only thing is, now Sri Lankan banks can make profits from this. That is the only positiveness is that. Now Sri Lankan banks cannot, they can pay high interest rates for dollar deposits, no? Because of this, because now these deposits also been paid higher interest rates, right? Then when Sri Lankan banks have dollar deposits, they can invest those dollar deposits in these development bonds. Is it? They can do that, no?
So what if on the maturity central bank won't settle these government bonds, SLDBs,
Yeah.
and they might find other alternative ways to settle these by the way of issuing LKR bond or something like that?
No, they can't do that.
They can't do that, no? They have to settle in dollars.
If they do that, then all these things, the trust will go away, no?
Yes,
So they
yes.
can't do that. They can't do that. Because now that will become another type of a default, no, if that is the case.
Yes.
Now say now, if they just try that type of a methodology to redeem those bonds, then it will become international news, no? Then the international community might say that the Sri Lanka, so Central Bank of Sri Lanka defaults something. That goes against the Sri Lankan central bank. So that is a very dangerous thing. Right, okay. I think now you see the repercussions, no? See the implications. Right.
I mean, definitely, sir, these things also need to be paying dollars at the maturity.
Right, of course, yes.
Okay.
So then the burden is there. The Sri Lankan government has a big burden on these dollar bonds, dollar sovereign bonds and the European bonds. The burden would be there. So this is a real, we call it vicious cycle, of course. But I don't know whether you are in a position to say something about it, or any solution for this. No,
since government doesn't have dollar, only 1.5 billion is there. They need to find out other solution.
No.
So somewhere I read it. That's why I'm asked. In some particular article, I saw something like that. That's why I can't remember exactly.
Pointless to blackguard or blame the government also, because now what we need to do is we need to see how we can get out from this the crisis.
Yes,
that is what we need to think. Even financial analysts or people like us, so you, all of us should get together and see how we can just get rid of these things, get out of these things. Any type of any suggestion or what? I like to.
No, sir.
They can reissue.
Yeah.
They can reissue, sir. They can reissue the new series. They can reissue
New
the
series can be
new
issued.
series.
No, yeah, of course you can do that, but that doesn't give a solution. Or you what you do is you just postpone your commitment. That's all. That's all happening, no?
So what?
So then what is the solution for this?
So what about if we have interesting investment, let's say industries, profitable industries, technical side. So
Yeah, of course.
the
That is the way.
investors will come and invest on this.
No,
Right.
investors. No, that is one way. Investors. Now we call them FDI. No,
Yeah.
foreign direct investment. So I think all of us, all the government people also now they are really going for that. But I don't know how these people come here and with the environment of Sri Lanka and with all these juggleries and all. I don't know whether people come and do that.
So we have to develop the trust.
Yeah, the infrastructure and the trust infrastructure has to be developed. So if you do that, I think people might come one by one. So that is one way. The other way is if the Sri Lankan people can do some production, either goods or services, and if we can export those productions to other countries, so that's another way.
So I think
either goods or services, right?
Yes, sir. I think in short term it's better to go for low-cost funding to settle these existing things. Then in long run, it's better to go for these manufacturing things and go for exports.
So the low-cost funds in the sense now, how are we going to look at those things?
So even that's right. Even we have to borrow from other countries to settle this.
Of course. Yes. So we have to get hold of our friendly nations. Get hold of our friendly nations. I don't know whether there are such people in the world. I don't know. If such people are there, if such countries are there, we can just have a consortium of those countries.
Yes, the thing is the foreign employees also doesn't send money as we expect, as government expected, no, due to the lower rate.
Yeah, of course.
That also of an issue.
That's an issue, yes. No, that is why the banks now try to pay 10 rupees more for dollar and all that, no? But that also will not work. So anyway, for the time being, the government is doing, they try to limit foreign exchange spending or whatever. That is what they do now. So they try to restrict most of the imports. Restriction of imports, that is the first thing they are doing. But there are certain things we can't really restrict. We can't restrict the importation of oil and all, no? Medicine, or that type of things. Those are the issues. Anyway, now, I don't know, as a financial analysis or whatever, students of financial analysis, if you have any ideas to just float as suggestions to the Sri Lankan government to just mitigate this crisis, I think that would be very much important, right? Any innovative ideas you can put forward?
So what's your thought on by relaxing the exchange control? Like will let the market to decide the exchange rate?
The issue here is this: if you do that,
dollar will go to 400
rupees. The prices of all the import goods will go shot up.
Exactly.
That will happen. But anyway, in the long run, it will help. Because when it is shot up, what will happen is people will not import items because they can't sell it in Sri Lanka. Therefore, what they try to do is they try to develop some production methodologies and they produce it in Sri Lanka. And they might, if they try to just export those things, within a year or so, if you can do that, then you can do something. I think the global situation might change if you do that. That is what I think you all can do.
Best thing is as an investor, what we can do, we can invest in export-oriented companies in the share market. No?
That is it. Yes.
They
yes,
will
yes.
have a good market.
Yeah. That's a good thing.
Profit. Yes.
And not only that. Now, I think if you can think about any innovative type of things. Now, innovative in the sense, you have some digital type of activities. Because, and have you heard about these bitcoins and all?
Yes.
Now,
Buy a bonds.
Now I think the Bitcoin thing is it's a novel thing, but I don't know. The Bitcoins are being really generated through certain algorithms and all. Those programmers, the computer programmers, and they had that ideas. If an algorithm is really being innovated or found, and then those things can be converted into bitcoins. So if you can develop digital research and all to find out such algorithms, that would be a better avenue. Because now the Bitcoin, the price of a Bitcoin has gone up very rapidly, and I think it's more than $20,000 or $30,000 now, one Bitcoin. Those are called cryptocurrencies. I can show you. There's a particular area with regard to cryptocurrencies in the Bloomberg also. Do you have any idea about cryptocurrencies?
If you want to purchase, you can buy something like USDT, that the price is rapidly increasing. If you pay LKR, you can buy USDT.
Yeah.
Using that, you can put as a FD as well, or you can buy alternative currencies as well. That is, but the price is rapidly changing. You have to do some research and need to buy that.
The problem is this now, say, when we look at it, we see that price is going up and up. But all of a sudden, there can be a reverse, no?
It's there, yeah.
Then that is so dangerous.
Yes, high risk.
Yeah. But what I feel is, rather than doing trade on these things, if we can produce, we can generate bitcoins. So that is my idea. If we can generate bitcoins, that could be a great help for Sri Lanka.
Yeah, for those things also, so there are typical machines, so their computers are there, the big machines are there, 24 hours you can do that.
Not in the machines. I think that
computers.
You need to have a very high brain power for that.
Yes. They automatically, like, end of the day, some amount
if we can
mine, Bitcoin mining, something like that.
Yes. If we can really collect that type of people and ask them to just design some type of algorithms on that basis,
that's a good idea.
then they would be in a position to do that. So that's the way of doing it. So I don't know how practical it is, but anyway, that is a way we can do.
Government also going to pass that particular act on the digital currencies, no?
The only issue is now people, I don't know. We should not really blame the government and blame the politicians for all these things. In my opinion is that since we are in a very dangerous and very drastic situation, we all should get together and see how we can get out of this trouble. That is what we need to do. So therefore, I think all these right-thinking people should get together and devise some methodology to have that type of a thing. Because your brain power, I mean, there are no restrictions on your brain power. You can think in those terms, have developed some type of algorithms to just have this blockchain or whatever. The blockchain, you call it blockchain accounting or whatever. So that accounting really begins with algorithms. So that is what the origination of Bitcoin. So I just wanted our students also to have some idea about these Bitcoins. That is why I just have taken these websites into consideration and just gave you some type of practical exposure here. Because I don't know whether, some people might have their own interest and they just go through this type of websites and they see how the information can be gathered also. Some people, interested people are there. But I don't know, all of you may not do that. My advice is all of you to do that type of excursions, do some exploration with regard to all these things. And you might get a very golden type of ideas. If you just keep quiet, just looking at the sums and do it and having supplementary problems and just by heart all these things and just vomit it on the question paper, it won't help. What we need to do is, we need to just learn all the basic things and see how we can do some innovative thing and get rid of this drastic situation, the country. That is what we need to do. Right. Now you can see now we have gone through the real documents, real data to see that how dangerous the country, how dangerous the country is positioned. Now we look ourselves. We now see ourselves all these things. I think you all should get the real pain on this. Right. Anything you need to talk about these things? And the other thing is, I don't know, if it is possible, you can just look at these global markets and see what are the trends developed in those markets, and see how we can do something to draw dollars from those markets to Sri Lankan markets. So that's another way. So all these things are in the vicinity. So what you need to do is you need to think the ways and means of doing such things.
So now the inflation also keep climbing, right?
Yeah, no, of course it will happen. No, it will happen. Why it is happening? Because your price levels go up. Price levels go up. Now price levels going up because of supply side problems. No, supply side problems are there, but the food demand and all is increasing. With that, the prices will go up. The other thing is you don't have dollars. Because of that, the rupee value, or we call it the purchasing power of rupee goes very, very low now. So that's another issue. So therefore, the price levels will go up. So that really eases the inflation. Now you can see, if you go to the central bank website, you will see that what is the inflation now.
So government issued treasury bill in the sense they were going to print the money, like
Yeah, of course. Now just look at it. Inflation is 14% now. 14%. There's a drastic inflation. No, I think I can remember now. One time the central bank said that they try to keep
single.
the inflation in one figure.
Yes, single.
Single digit or whatever. 9%, 8% or so. Now it has gone up to 14%.
The thing is now inflation is 14%, but the bank interest rate almost under 10. Now it also
That's the thing. That's the thing. Yeah. So that is now sometimes there can be a kinked yield curve because of that. Now say for example, now the banks give now in time to come what will happen is you can get more interest from treasury bills than bank deposits.
Yes.
Can you imagine that? I mean, now treasury bills are normally we call them risk-free instruments, no. But bank deposits are not risk-free. Bank deposits would have some risk, but bank deposits will have a lower interest rate in Sri Lanka. I think I can remember in 1990s, 1997 or 98, the treasury bills draw about 20%, the interest rate, whereas our fixed deposits only have 14 or 15%. I don't know whether you remember that. In 1998 or so, I can remember that. Those days, people, what they did was now they just switched their investments from bank deposits to the treasury bills. So that was reality at that time. Now you can see here the SDFR and SLFR just kept in 5.5 and 6.5. Now only thing is I don't think now in next policy review, I think this policy rate should go up again. Should go up again.
They already increased by 50 basis points, no?
Yeah, last time it was increased.
22nd, yes.
Yeah. Right. Now I think those things actually we can take into consideration. Now when you look at these things, and the beta values also can be obtained. I don't know if you go into another website, and I think that also can be done. Only thing is these Bloomberg people now they don't give these things free. That is the issue. Now, I have seen in some place they say that your free trial run is over, whatever. I got some message, right? So anyway, you can do it, but I have seen in some place where they say that it is only $0.5 or so for week or whatever. So that type of thing comes. Anyway, we can see. When you talk in terms of stocks, this comes. The other thing is now I just want to tell you this Bloomberg will give you a very good information base. You can get that information very easily from the Bloomberg website. Now I think just read it. Now Malaysia Central Bank signals patience on rates to aid recovery. Now they are not very hasty or they are not very excited with regard to the rates. What they do is they just keep quiet and wait for some time to do something. To get some recoveries done. Or aid recovery means the economic recovery. Now this is regarding the fixed income securities here we have gone through. Or we can go through Bloomberg. Now there's a possibility of going into these different stocks and their details. Now I can show you this also. It says monthly digital $0.5 per week. Unlimited digital access on Bloomberg.com and the Bloomberg app. Get monthly digital. So this is one way of doing it. Anyway. Right now, if you go to this type of website, you just get these things. The stocks. When you go into these stocks, you can go differently into the different indices. Say we can go to Dow Jones. They always try to see, they try to get these things done. I mean, not that easy for us to do these things free. Anyway, I will just give you a certain type of option where to like you can just pay $0.5 per week, or it may be monthly thing where you have to pay about say $2. Yeah, $2 per month. That comes to about say 500 to 600 rupees. So if you do that, you will be in a position to just do these things for 1 month or whatever. You can, or there's another way of doing it. You can see whether any free trials are available. Any free trials are available. If free trials are available, you can just get hold of that type of a trial and go through it. And even the Bloomberg terminals may be demonstrated through free trials sometimes. So that you just do. I mean, just check that whether we can do it. Right. Right, now the other thing is, now you should understand the mechanics of Sri Lankan stock market before going into the Bloomberg or global markets. You have to be thorough with Sri Lankan market conditions. And for that, you need to get hold of this CSC, Colombo Stock Exchange website. And when you go into other publications, what are these other publications? Right. There's another thing I just want to tell you. Now, we have gone through methodology where we can arrive at the stock value or stock price by looking at the dividend growth of that stock. And we call that model the perpetual dividend growth model, constant dividend growth model. And we call it one stage model. Yeah, what you do is we can arrive at the price of the stock by dividing the first year's dividend, or D1, divided by K minus G. D1 is the year 1 dividends. So, for example, if you know the current dividends into 1 plus G, that is the next year's dividend. Because the dividend, if the dividend growth is so much, you can just multiply the dividend with the growth. That growth can be added to the present dividend, and then you will get the next year's dividend. So that has to be divided by K minus G. K is the rate of return, required rate of return. G is the dividend growth. So in that way, you are in a position to arrive at the stock value or stock price. Now, in order to do that, you have to be careful. Now, I will just go into the blackboard and just show you. That is now T0 price is equal to T0 1 plus G divided by K minus G. Now, this is what you call the one stage dividend model. One stage dividend model. We have gone through this and we did some problems also on this subject area. Now, I just want to tell you the practical aspects of that. Now, in order to apply this equation or apply this formula, you should verify and you should assure there's a dividend growth which is constant. Now, how are we going to look at that? So, you need to go to the stock market publication or whatever and see what were the dividends declared for that particular stock for the last couple of years. By looking at that, we can see whether the dividend has been grown on a constant way. If it is not exactly constant, you can say that if it is approximately constant also, it's okay. So then that condition is okay. And there's another condition, that dividend growth rate should be lower than the required rate of return, the capital, the cost of capital also. If it is not lower than the cost of capital, if it is higher than cost of capital, then what will happen is you will get a minus price, and it is not feasible, and you are not in a position to calculate the price of the stock by having that type of a equation. Then what you need to do is you need to apply another method to arrive at the price of the stock. That we call the two-stage model, because there you assume for a couple of years, or say 5 to 6 years or 4 to 5 years, there would be a very high dividend, which is higher than the capital, required capital or rate of capital. But it might prevail for a period of time, say 5 years. Afterwards, there will be another situation perpetually. There will be lower growth of dividends, which is lower than the required rate of return, and that stage also we can calculate. Now, what I want to tell you is, those things we have already studied, already done. But you need to check one of these stock market daily or a monthly publication and see the declaration of dividends for certain companies. And you need to get the dividend of declaration of dividends for the last couple of years, and just look at the companies where they declared dividends at a constant growth rate. Constant means it may not be 100% constant, but at least approximately constant. Then only you will be in a position to apply this type of things into such stocks. That is one way of arriving at the value of the stock. But then we can compare that value with the market value. When you compare it with the market value, you can see whether the market undervalued the stock or overvalued the stock. Then we are in a position to take a decision whether to invest in that stock or not. This is the practical situation. So are you comfortable with that? Can you just do that? At least you can select 5 of 6 stocks where you can categorize those stocks as constant dividend growth stocks. For that, you need to see what were the dividends declared for those stocks for the last couple of years, and select the stocks where the dividends grown at a constant rate. For example, say Asps, they have declared dividends on, say, year 2016. They declared dividends per share, say 2 rupees. And 2017 they declared 250. Sorry, 225. In 2018, it is 250. Likewise, you can see the amount of dividends declared, and you have to just check whether the growth of dividends is same for each year. Now, if you do it for starting from 2016, then you have to come up to 2018 or 19. There you can see how that dividends been grown and see whether those dividends go at a constant rate. For such type of stocks only, you are in a position to apply this model, one stage model. And there's another condition. The growth rate of dividends should be lower than the cost of capital. Right. I think those things are, you can see how those things are applied in practical form. Right. Anything else you need to clarify on these things, which we have done today? And are you comfortable with what I did during the session today? And you all can, on your own, can you do these things? Can you go into this type of websites and gather information? So that's a type of a skill you can have. You need to develop that skill.
Yes, sir.
So anyway, anything else you need to clarify?
No.
Right. Ruchira and I think people, it's a very limited number of people are talking, but others, I don't know. I really want all of you to just interact, because this interaction is a very important thing. Samit Chivant has asked a question. Keep the particular share until next date, and if we sell the share on next date, do we have entitlement for dividend payment? No, as soon as you sell the share, the dividend declaration was made on the same date. I don't know. There will be an issue because your transaction will take place, and that there will be some settlement issue, no? Because of that, you may not be entitled. You will not be entitled. Because now, in that case, the person who receives the share will get the dividends. In that case. Right. Okay. I think with that, I am going to wind up the session. Anything else you need to clarify? If you want anything to be clarified, I just can say, try to do that. Even during the course of the week also, you can ask questions. You know my number, no? Telephone number. So then if you want anything to clarify or anything to just verify or whatever, so you can just call me. Right. With that, I thank you all of you for your active participation, your interaction, and just I advise all of you to be innovative in what you do and do something for the country. Just try to do it. I mean, this is not a joke or whatever. I just want all of you to be with that and see how we can support the country to get rid of this situation. Right. With that, thank you all of you. Thank you very much.
Thank you, sir.